Hi, my name is Brian Levine. I'm a third-generation attorney whose family has been handling probate estate matters in Pennsylvania since 1939. I'm here to introduce you to a practical guide and four major steps to probate estate administration when a decedent or loved one passes away in Pennsylvania. This practical guide is meant to be a big-picture summary to a very complex process that involves many moving parts. Every estate has its own set of facts, but at the end of the day, the administration process will follow the same formula of the following four steps in this chronological order. Step 1 is opening the estate with the Register of Wills office in order to appoint a personal representative. Step 2 is closing out all the decedent's assets, consolidating them into an estate checking account, and then paying all the estate expenses. Step 3 is preparing and filing an inheritance tax return. Step 4 is paying inheritance to all the estate heirs and closing out the estate through an estate settlement agreement or court final accounting. Now I'm going to break down each of these four steps a little further. Step 1 involves opening the estate, also known as probating the estate or appointing a personal representative. This person is called the executor if the decedent had a will, or an administrator when there's not a will. Any immediate next of kin family member is eligible to apply or step down in favor of other eligible family members or an attorney. Once the estate is open, you move on to step 2, closing out all the decedent's assets. Whether we're talking about transferring or selling decedent's real estate, vehicles, bank accounts, retirement accounts, or investment accounts. All these accounts are consolidated into one estate account, and the estate funds are used to pay off all the estate expenses, taxes, and fees, so that ideally no money is paid out of pocket. From there, you move on to step 3, which is preparing and filing the inheritance tax return, also known as a Rev 1500, which is filed with the tax agency called the Pennsylvania Department of Revenue. It usually takes the Department of Revenue 6 to 9 months to review the tax return and send an approval letter to the attorney's office. Now, while you're waiting for the PA Department of Revenue to approve the tax return, the attorney and personal representative work together to tie up loose ends, which means paying all the known bills and debts to any creditors and paying advance distribution, also known as advance inheritance, to all the estate heirs or beneficiaries while you're waiting for the tax return to be approved. Once the attorney's office has received the approval letter, you will move on to the fourth and final step to close out the estate, which can be done by agreement in writing between all the heirs or beneficiaries, where everyone is signing an estate settlement agreement. This is filed with the Register of Wills office or the Orphans Court, also known as the Probate Court. Or alternatively, to close out, if all the heirs are not willing to sign or want some type of court intervention, a final court accounting is filed with the Orphans Court, and the probate judge reviews and audits all the transactions of the estate, holds a hearing if any of the heirs have any further questions or objections, and then signs a final court order approving the estate to be closed. These four steps should be followed to handle the administration of any estate in Pennsylvania, and at the end of the process, you'll have peace of mind that you've successfully wrapped up all the financial affairs of your loved one's estate. Thank you for listening, and I look forward to speaking with you in further detail about any of the specific facts and circumstances of your loved one's estate.